Good morning, everyone, and welcome to the Sirius Report. Well, Paul, it's been a downright hilarious in many ways. The fact that so-called Western analysts have been pushing the narrative that China's economy is in a severe downswing. But data just out indisputably readily puts an end to that garbage.
Yeah, absolutely. And what a surprise. I mean, we're back to the familiar story of, well, this is China's losing again, apparently. I mean, can you imagine what China winning would mean if this is losing? But in essence, what this data highlights very eloquently is not only the reality of China's economy, and we'll go into some detail as to what that is, but also how it is very clearly continuing to decouple from the United States very rapidly and very successfully. And but also it just highlights clearly why US tariffs have been a complete failure. And we can use China as the benchmark for that, given, the size of China's economy and the importance of what those tariffs were supposed to be, which we know, and we're not going to go into why it was all a complete load of nonsense. If anyone still believes it's the Chinese paying for them, well, then, this is a pointless conversation, because if you can't work that out, then don't bother listening to the rest of this, because you won't like what you're hearing and it'll just reinforce the obvious viewpoint that tariffs were doomed to fail from day one. And I would add, and from my perspective, increasingly, I think somebody said to Trump, we'll put these tariffs on, or the world will capitulate to our demands. We'll raise trillions from this, and this will plug holes in our budget deficit. And that's why they did it, of course. It's anything but the case. But why is this relevant to this conversation about China's economy? Is because its trade surplus, or it was over this year so far for the first 11 months to the end of November, of course, topped 1 trillion. That's the highest level ever. And this was all predicated on the fact that when all this tariff debacle kicked in, all we kept hearing is China's economy will be destroyed by this. You'll see a collapse in China's economy. And now it's like, hang on a minute, that didn't happen, because China's exports for forecasts for November were higher than expected, partly due to the fact that there was increased exports to the European Union. And China's exports therefore grew by 5.9% year on year in November. I mean, and obviously through the first 11 months of 2025, China's exports have grown 5.4% year on year to date. Ironically, that's exactly at the same level as the first 11 months of 2024. Now, of course, there'll be people saying, well, this data's not believable, it's fake, it's false. Well, it's very easy to determine whether it's true or not, because if you look at the export destinations to whether it's the European Union, whatever they send to the United States, or the ASEAN countries, etc., all that data is readily available, and you can add all the figures up, and you'll unsurprisingly come to the conclusion that, in fact, China's exports did grow by that much in year over year for the first 11 months, and it is indeed at a record high. The interesting part with all this data is again, with respect to US tariffs, exports to the US have continued to decline, including in November. So November exports to the US were down 28.6% year over year. That's a 3-month low. The year to date fall is 18.9%. I mean, there's trying to sort of make excuses like, oh, well, the November exports don't fully reflect all the cuts in tariffs. Oh, we should start to see an improvement in the coming months. Well, maybe or maybe not. But at the end of the day, what is very clear is China just said, okay, if you are going to put tariffs on our goods, we just won't send them to you. Simple as that. We don't have a problem with that because, unbeknown to a lot of people in the West, China has alternative markets that it can send to. So, not only in terms of what we just said with regards to exports to the European Union, but there was an increase in exports to Japan, which rose 4.3% year on year. Exports to the ASEAN actually, ironically, fell slightly in November, but the general trend is, and we've seen it for a number of years, this big increase in Chinese exports to the ASEAN countries, to global South countries, and for that matter, the European Union, and obviously Africa. And therefore, on that basis, it's exactly the point that China's going to sit there and go, well, we have alternative markets, and therefore it isn't a problem for us to divest away from you, the United States, if this is how you're going to behave. We don't have a problem with that. And so be our guest if you want to continue to impose tariffs. Well, we'll just cut you out of our exports. Now, the problem for the US in doing that is, where's the alternative? And if they're trying to source alternatives globally, they're going to really struggle. And even if they can find alternatives, then they're going to pay hugely higher prices. So never mind, obviously, the argument now is, well, they're not getting them from China, so they're not having to pay the tariffs. Well, that is true. But the price they're having to pay to get those goods from elsewhere, which probably ultimately means they'll still be from China in some capacity or other, is going to be significantly higher. So the problem with that is you get producer price inflation. And also, of course, if you don't and continue to not have access to Chinese goods, in the end, you're going to end up in the long term with an inflationary depression. Quite literally, the US cannot survive without cheap Chinese goods, rather like Europe cannot survive without cheap Russian energy. And the United States is in no position for a considerable period of time to find alternative markets for the goods that they import from China currently. Rather like Europe is not going to find an alternative to Russian energy. Yeah, it can buy energy, but it's a lot more expensive. And Germany will tell you what happens when you buy far more expensive energy. You destroy your economy, as is the rest of Europe now finding out also. So, in essence, in talking about the exports, and there are other things we'll come to, but I'll give way to Ken, is not only is China's economy going from strength to strength, but China is demonstrating very clearly that it is decoupling and will continue to decouple from the United States very successfully. And from the US's perspective, putting tariffs on Chinese goods has proved to be a total failure and a disaster.
Yeah, one of the interesting things, because when you take a look at those export numbers, there's something that doesn't really, just saying the numbers and the fact that they're record numbers doesn't really explain the entire thing. Um, a former British diplomat, Alistair Crook, was in a recent interview, and he said this: China now has the leverage over the West. It is in price deflation while the US is in price inflation. Now, what does this mean? When you talk about the export numbers, usually they're based on just the cumulative value in a price. Okay, we shipped 1 trillion, say, US dollars worth of goods outward to the world, yada, yada, yada. But if these are cheaper goods and the US is trying to do export more, that means they're selling actually more goods within that trillion, where the US, if say they have a $250 billion export, they're selling less goods because the price of everything is higher. So China is not just doing record number of export sales, they are also doing record numbers of export quantity. Now, why is this important? Hold on a second. Cough button. Um, the important thing is when you take a look at China, and something also you said was China is primarily looking to get all its needs within its own boundaries. It's not, it doesn't need a whole heck of a lot. As a matter of fact, there was someone who went to China recently and they had to ask the question, what is it that China wants to buy from the rest of the world? A few said to him, well, soybeans and iron ore. But that might help in the case of Australia for some iron ore or the United States for soybeans, but that doesn't help at all for the Europeans. And some of the observations were that, well, we got specialized handbags and luxury goods. I saw a recent video of a textile worker who took a brand name bag, broke it down and reverse engineered it and said, this costs retail in Europe 1,500 euros. The amount of materials in that, we could do it for 250. That's what I mean, the difference between the price inflation and the price deflation for the exact same things. So people really don't understand the whole crux of this is that the Chinese are getting prosperous not necessarily just because they're exporting everything, but they can do everything cheaper, and the value of their currency, etc., has not inflated to the point that it has in the rest of the West, where we could, somebody makes $150,000, they can't even afford rent at an apartment.
Yeah, absolutely. And it's worth noting as well because the West also loves to try and reflect upon the fact Chinese imports are down because China's domestic demand's down, because the economy's cratering. Well, China's import growth in November was up 1.9% year over year from 1% in October. So it's still growing. It's not contracting severely. Okay, year to date, import growth has been down 0.5%, but still that isn't a particularly high figure. Yes, there's a big difference between exports and imports, but what do you find? That China's rotating its economy. So we're seeing very strong tech-related imports up about 8.7% year on year. Now, interestingly, of course, they will claim because they look to say that China's property sector's crashing. Remember, we had all the issues several years ago about Evergrande, etc., and that was going to be China's Lehman moment. Well, weirdly, I'm still waiting for that to happen. Oh, what a surprise! It's not happening because it's nonsense. But I'm going to give you one example where they talk about the fact that the reason there's been a big slump in lumber imports to China, which they used to get a lot from the United States, was because they said to the United States, well, we don't want your lumber anymore. Because the US, of course, went stupid and put ridiculous tariffs on it. Here's the thing. Where does China get a lot of lumber from instead? Russia. Does it declare this? No. So how much change has there actually been in imports? Well, that's debatable. The other thing is the way they try to tally up property to lumber, as though the majority of properties built in China are made from wood. Well, I'm sorry, that's not true either. But the reason I'm highlighting this as an example is when they see big declines, they don't seem to bother to assess why that decline might have actually happened. I mean, and also you have to look at structural shifts in China's economy because of things like the auto sector, because what happened in the year to date. China's imports in the auto sector fell 38.3%. Does that mean China's auto sector is collapsing? Quite the reverse, because they're doing everything domestically. So when you start to look at all the raw constituents required to produce automotive vehicles, then you start to go, well, hang on, if there's a decline in these raw materials, why is China's auto sector growing and becoming the dominant player globally? Well, this is another example where you can look at data and be led to one conclusion, where in reality, it's completely the reverse. As we can, I don't think very few people would actually disagree that China's domestic auto sector is thriving hugely, not least because of the big, huge changes in the market to EVs, etc. So again, another example where import data, you have to treat it very carefully and with a degree of healthy skepticism. Now, obviously, what's very telling is that one of the complaints a lot of the Western countries have, and certainly the Europeans, is that we have this imbalance of trade with China, meaning you don't import enough stuff from us. Well, they need to assess why China wouldn't do that, because China clearly is able to either produce the goods far cheaper themselves, which is true, or they're able to import them from somewhere else far cheaper, which is true. And also, China's on this ongoing pivot to have enormous domestic demand and consumption, which takes time, but they're getting the balance between shifting their import and export markets, changing the goods they manufacture domestically, and still getting 5-6% growth annually. That is no mean feat to be able to do that. And, this is all part of China's big move to in terms of the next phase of its economic development. Something was spoken about for years when people didn't even know what import substitution was, that there was this gigantic rotation in their economy. That's another reason why we're seeing the issue of China having this apparent imbalance between exports and import. I don't see why it's so critical for a nation to have to be seen to continually grow imports as well as growing exports. It's better for China if they import less and export a lot more, because that will improve the trade surplus, clearly. And it's indicative of the fact that China's economy is rotating to reflect the big changes, and they're successfully doing so. If they were failing, then you would have seen their traditional export base collapse, and you would have then seen a huge trade surplus disappearing and becoming a deficit, or almost a deficit, because they would have then been far more reliant on imports. The fact they are rotating their economy and successfully doing what they're doing is testimony to the fact of why China's economy is irrefutably the strongest and most vibrant in the world currently. I know there are other countries who you could argue his economies are doing very well, but you've got to bear in mind the size of China, the population, and they are very, very successfully managing to change their economy and continue to succeed. And despite the fact apparently China's going to collapse next week, and that's been the case for 25 years, to my knowledge.
I think one of the things that people don't understand as well is that it's not necessarily that China is simply a powerhouse of industry that exports to the world. Okay. When it comes like Apple is affiliated with Foxconn, and then the iPhones are shipped back to the US or around the world, et cetera, et cetera. There are so many different ties between US and Chinese companies, European and Chinese. Just take a look at Nexperia. Okay. Nexperia is a European country within the Netherlands, but to, but the chips are made in China, and China has that affiliation with Nexperia. They had the leader of the board who was Chinese, etc. So when there was a schism to try to stop this, they didn't get the chips because they were created in China, despite the fact it's a European country. And with that being said, recently, I think it was over the weekend, Macron went to China, got the red carpet treatment, and as you pointed out, France, among other European countries, have been attempting to vilify China for its trade imbalances. But really, is China the one that they should be pointing the finger at? Because at the same time, European companies are steadily moving and investing in China, not in their own domestic countries. They say because China's low costs, efficient supply chains, and it's increasingly difficult to compete with Chinese rivals. So just like Nexperia is a conglomerate between Chinese investment and European company, that same thing is happening right now, where European companies are investing in China. They're building and doing the production in China, and then those exports show that they're coming from China rather than exports coming from Europe, despite the fact that European companies are fully tied into a lot of these exports and sales, the same way that Apple and other US companies do the same thing with China. So, in many ways, Europe and the United States, I think, are pointing the finger at the wrong entities. It's not China's fault necessarily that they can do it better. It's that their own environments, business environments, are so corrupt and polluted that their own company, their own nation's companies don't even want to work there.
Well, the problem is they can't compete those. It's quite simple. If you can produce a widget for $1 in China, as a Western business, when it costs you $10 in the West, where are you going to produce them? You're going to go to China because it's much cheaper. It's just the cost matrix is reached a breaking point now because of thanks to financialization. So that's what it ultimately boils down to. They can't be competitive in the West anymore. So if you want to survive, you go to the country where you can survive. And that is the global South countries, not exclusively China. But yes, a lot of European companies are moving operations there because it's the only way they can survive. So the fault in the West is you created financialization, you destroyed your economies, which was always going to happen. You've only got yourself to blame. Stop pointing the finger. But of course, they know it's their own fault. They just have to find someone else to blame and hope that the people in their countries believe this nonsense. And sadly, too many still do.
Indeed. Any final thoughts you wanted to add to this, Paul?
No, I think that's probably fine.
To everybody here at the Sirius Report community, as always, thank you for your support. Don't forget to like, share, subscribe, comment, send this out to anybody you think might be important to, and until the next time we get together, have a great day.